In this video, I am going to discuss about decision trees. Decision trees are a visual and intuitive tool for decision making where different choices and the outcomes for each decision are represented visually. This technique helps businesses make informed and rational choices by systematically considering different factors and outcomes involved in each decision. Decision tree is more useful than probability distribution tables, which is expected values, because this technique considers about the chain of reactions for n uncertainty of an outcome, which means under expected values we only considered the probability for each outcome. We did not consider what were the factors affecting that outcome. Here under decision trees, we are going to consider those hidden factors as well. So simply, decision tree method is more reliable and useful than expected values. And also remember, for the calculation part of decision trees, we are going to use the expected values technique. There are two elements of a decision tree. You need to know about these two elements. A square represents a decision point in a decision tree. A circle represents an outcome point. How many decision points are there in this decision tree? There are two decision points, A and B, because these are squares. Then how many outcome points are there in this decision tree? There are three outcome points, 1, 2 and 3. Circles represent outcome points, squares represent decision points. Decision points means we have to make a decision at this point. Just look at this decision tree. At point A, we have to make a decision whether to select option A or select option B. At this decision point, we have to make a decision. Let's say if we select option A path, then we will meet an outcome point, which is this. If we select the option 2 path, we will meet an outcome point here. And there are further elements after this outcome point. There is again a decision point. Here we also have to make a decision whether to select option 3 or whether to select option 4. The path will grow as we make decisions until we meet the final outcome. This is the guideline to draw a decision tree. You need to remember these guidelines. You will be not required to draw decision trees in your exam, but you have to have understanding how the decision trees are drawn and how the decisions are making use a decision tree. These guidelines may also be tested in your exam, so have a thorough understanding of the following points. Now we know squares represent decision points, circles represent outcome points. Decision tree starts with a decision point. Let's go back. Look at here. This decision tree starts decision point. So now you know every decision tree starts from a decision point. Draw the decision tree from left to right. This means you have to start drawing your decision tree from the left hand side to right hand side. Calculations do from right to left. After you drew your decision tree, the calculations will be start from the right hand side to left hand side. Calculate the expected values for each outcome for a outcome point. Let's go back. Here is an outcome point. We have to calculate the expected values for outcomes of this outcome point. Now you know how to calculate the expected values. We have to consider all the outcomes for an outcome point. Costs should be deducted from the outcome unless otherwise specified. You will get to know once we do the next example. Always remember in decision trees, there will be negative values as well as positive values. Negative means those are costs or cash outflows. Positive means those are cash inflows or profits or returns. So you have to be mindful when you are calculating expected values using a decision tree. Select the highest expected value decision. Reject the negative expected value decisions. If all the decisions are negative, select none. This means if all the decisions have negative expected values, you don't have to select any decision because all of the outcomes will give us a negative expected value. We don't need that. Negative expected value means here a cost. We are not looking to increase our cost. We are looking for increase our revenue or the profit. So reject all the negative expected value decisions and select the highest positive expected value decision. Let's do this example so you will understand what we have learned so far. A company has launched a new product to the market 6 months ago. Management team has to make a decision whether to continue or stop the production of this product. The decision tree is given here. What is the decision? The decision the management team has to make is whether to continue this product or abandon this product. Now let's read this decision tree first. We will read this decision tree from left hand side to right hand side. So this is the first decision point. Now you know all the decision trees have to start from a decision point. So at decision point A, we have to make a decision whether to continue or abandon this project. If we abandon this project, we will save $18 million. This is a positive value. If we continue this project, there will be a $5 million cost. This is a negative value, which means a cost. So there is the first outcome point, and there are two outcomes with probabilities 0. 0.6 and 0. 0.4. 0. 0.4 outcome will lead to $12 million inflow. This is a positive value. And 0. 0.6 outcome will lead to another decision point B. So now we have to make a decision whether to buy new machines or whether to rent machines. If we rent machines, there will be a cost of 0.1 million, and there is a outcome point here. There are two outcomes. 0.6 probability that we will make $12 million. 0.4 probability we will make $10 million. These are all positive values. This means cash inflows or income. If we decide to buy new machines, there will be a $0.6 million cost, and there will be an outcome here. There are two outcomes. With 0.3 probability, we will make 6 million. With 0.7 probability, we will make 10 million. This is how we read the decision tree. And also from left side to right side, we draw a decision tree. Now let's calculate the expected values and see what decision we have to make. Now you know we have to do the calculations when using decision trees right to left. So let's find out what are the expected values for each outcome points. This is the outcome point 1, this is the outcome point 2, and this is the outcome point 3. So now what we have to do is we have to find the expected values for each outcome point. For outcome point 1, these are the outcomes. How do we know they have considered all the outcomes for each outcome? We can simply add the probabilities of the outcomes and see whether it is 1 or not. So 0.3 and 0.7 is 1. You already know this. We discussed this under expected values. Let's calculate the expected values. 0.3 multiplied by 6, 1.8. 0.7 multiplied by 10, 7. So the expected value for outcome point 1 is 1.8 plus 7, 8.8. Now let's calculate the expected value for outcome point 2. 0.6 multiplied by 12 equals to 7.2. 0.4 multiplied by 10 equals to 4. So the expected value for outcome 2 is 7.2 plus 4, 11.2. Now what we have to do is we have to calculate the expected value for buy new machine option and rent machine option. So the expected value for buy new machine equals to 8.8 minus 0.6. This 0.6 is the cost equals to 8.2. The expected value for rent machine equals to 11.2 minus 0.1 equals to 11.1. So now we have to make a decision at decision point P whether to select buy new machines option or rent machines option. We select the highest positive expected value option, which is rent machines. So this equals to 11.1. Now for the outcome point 3, we have to calculate the expected values. So 0.6 multiplied by 11.1. 11.1 is the expected value of the decision we selected. This equals to 6.66. For this outcome, 0.4 multiplied by 12, 4.8. So the expected value for outcome point 3 is 6.66 plus 4.8, 11.46. Now we have to calculate the expected value for the option to continue, which equals to 11.46 minus 5. 5 is the cost we have to incur if we select to continue this product. Be very mindful to deduct these costs. This equals to 0.46. Now we have to make the final decision at decision point A, whether to continue this product or abandon this product. We select the highest positive expected value option, which is to abandon this product because 18 million is higher than 6.46. So we select the abandon option. You may think why there is no cost here. Some cases there will be no cost. If they have given costs, you have to deduct them. In case there are no costs, we can simply take the value as 18 million. So the final decision is abandon this product. I hope now you have a thorough understanding about decision trees. Always refer to this guideline when you are calculating expected values using a decision tree. We always read the decision tree from the left hand side to right hand side, and we calculate the expected values from right hand side to left hand side. And from the decisions, we select the highest positive expected value and we reject all the negative expected value decisions. Now let's discuss about pros of decision trees. Easy to understand. Decision trees are visual and easy to interpret, making it easier for business stakeholders to understand the factors that go into a decision. Now you know this clearly because we did an example. Data driven. Decision trees rely on data to make decisions, which can help ensure that business decisions are based on solid evidence and analysis. Can handle complex decisions. Decision trees can be used to model complex decisions that involve multiple factors and criteria. Can be used for prediction. Decision trees can also be used for predictive analytics, such as predicting customer behavior or market trends. Now let's discuss about limitations of decision trees. The data and the probabilities used in the decision tree to calculate expected values are estimates. And also these probabilities are usually subjective. The decision trees uses expected values. So the limitations of expected value method will apply to decision trees as well. The decision tree analysis ignores non-financial factors. Thank you for watching. See you in the next video.